Shakespeare's play has got a business in it. Antonio goes into the spice trade, and we're going to see just how Pacioli would have handled it. Treat your business as if it was a person, and keep the records from its point of view. So from its point of view, the owner is a liability. Anything the owner invests in the business is an asset, but the business owes it back to the owner as a liability. And Pacioli was a mathematician, so he expressed this as an equation. Assets equals liabilities. Then he said, well, you have to make a profit or you won't stay in business, so let's add profit on. And then, because profit is equal to revenue minus expenses, we can replace profit. But look, there's a minus sign now. Now, in the 15th century, clerks did not understand minus signs, so Pacioli knew that he had to get rid of it. And he did so by adding expenses to both sides of the equation. So as you can see, we've now got assets plus expenses on one side of the equation. At first sight, that's a bit surprising, but really, assets become expenses as they're used up. You can think of them as a store of unused expenses. But now, of course, the next problem, we've got an equal sign in it, and accounting systems don't have equal signs in them. Pacioli knew how to get rid of that. Subtract the liabilities and revenues from both sides. On the right-hand side, they disappear. And now you have a self-balancing system. Assets plus expenses minus liabilities minus revenues equals 0. And then he thought to himself, if I don't put signs on the headings and do put signs on the numbers, I can write it like this. Look, assets, expenses, liabilities, revenues, and then a plus x minus x balancing to 0. But then he saw another problem. The cash column would have pluses and minuses all mixed up in a single column. And if you lose control of cash, you lose your business. So 2 columns are introduced, one for pluses and one for minuses. Still, we've got a minus in it, can't have that. Clerks would not understand it. So the next thing to do was to disguise them. And they've been disguised as DR and CR, debit and credit. And I'll explain later on how this came about. Well, that was a very quick review of the content of the first video I made called Patchy for the Web, which really does explain how our accounting system came about. The references to it are given below. Now let's use Pacioli's system to tell Antonio's story. Here's Trader's worksheet using assets minus liabilities equals 0 and using single columns to begin with. We'll go through it line by line and I'll introduce the headings as we go. So first of all, Antonio puts all of his fortune, 100, into the business in cash. So we have cash, 100, and the capital column, which represents his claim upon the business, also has 100 in it, only of course minus 100 because each row has to balance to 0. Trader buys a ship for cash. Cash goes down and we have a column for the ship, which goes up. He buys gold, which he's going to trade when he gets to Alexandria for spices, and he gets it on credit. So we have an asset column, gold, with 30 in it, and an accounts payable column, also with 30 in it, but of course minus to make it equal to 0. He buys provisions, food. The food column goes up, and cash goes down. The ship goes off, trades, buys the spices, comes back and sells them. So now we have sales revenue. We don't get it in cash. We have an accounts receivable column, as you can see. The accounts receivable column goes up 120, and this is revenue. So we have a revenue column. Wages are paid. Cash goes down, and expenses, which is what they are, go up. We're not buying the sailor, we're buying his time, remember. All the food gets used up. So we take it out of the food column and put it into expenses. Assets become expenses when they're used up. The customers pay, but they only pay half. The accounts receivable goes down, cash goes up. And we pay the accounts payable people, all of it. Minus 30 and 30 to accounts payable. A plus number to cancel out the minus number above it. Now let's see if we've made a profit. We open a new column, profit and loss. we transfer the revenue in. Plus 120 in revenue to cancel the minus above, and minus 120 in profit and loss. We charge the cost of goods sold. We transfer the expenses. We add it up and find that we have made a profit of 75. And since this will be owed to the owner, we transfer it to capital. Antonio withdraws 20. We total the columns to get the balance sheet, and as you will see, the temporary columns, expense and revenue, have got zero balances in because they've been transferred to the profit and loss account. I should comment on the 155 that's shown as a minus number in capital. And what it means is that trader's been doing very well, and he's increased the value of the business. And so he's increased the amount that the owner can claim against the business. That is what the minus means. There is still one problem. In the cash column you have plus and minus items all mixed up together. And that's quite dangerous because you need to know how much cash came in and how much went out to be in control. If you don't control your cash, you could lose your business. So let's see how that was solved. To solve the problem as to how much came into an account and how much went out of it, Pacioli found the Venetian method had introduced two columns, one for the plus items and one for the minus items. This is getting very close to the T accounts that you might be used to. So Pacioli said, okay, I'll do the same with my worksheet. So let's have a look at it. There we are, look. T accounts. The asset and expense accounts on the left, the liability and revenue accounts on the right. We have two columns, a plus column and a minus column, as you can see in the ship column. Let's look at the first row though. Cash invested. We have 100 in the plus column of cash and 100 in the minus column of capital, balancing to zero. And of course there are no signs on the numbers anymore. They take their signs from the columns that they're in. I won't go through all the other numbers, we've done those together recently. Now let's go back to the ship column. One of the problems that you get when you have two columns is when you add them up you lose the balances, so we have to recover them. And Pacioli said, add the two columns up. Now of course there's nothing in the minus column of the ship at this moment of time, and we have 80 in the plus column. He said, put the 80 as the total of both columns. Then say to yourself, how much do we have to put into the smaller column to make it equal 80? And of course in this case it is 80. So we put the 80 in. Having put it in a minus column, we have to put it in a plus column as well. No reason why we shouldn't use the plus column under the same heading. And there it is, it's the balance carried down. And we do the same for all of the columns. But we still have the plus and minus signs at the top. What are we going to do about them? Pacioli said to himself, the Venetian method has disguised the plus and the minus figures and replaced them with DR and CR. DR, that probably comes from the word debere, which means to owe. I see. The business owes anything it holds to the suppliers, including the owner. So how about the minus sign? That comes from credere, to trust, because the people that supply the business with things are trusting it to repay them one day. That's why they've done it. DR, debits, CR, credits, are the disguises that they've put onto them. I'd better do the same. There. But of course, debits and credits gave us another problem. As you can see from these columns, that the asset and expense columns have their balances on the left, whereas the liability and revenue columns have their balances on the right. So if you put a debit, which is a left-hand entry, into an asset or expense account, it will increase it. But if you put a left-hand entry, a debit, into a revenue or a capital or liability account, it will decrease it. And the same is true of credits, but the other way around. And that has given us trouble all over the years. It didn't seem right that something that was debiting could both increase and decrease accounts. But it's not the debit's fault. It's the fault of the account it goes into. Anyway, this is a very valuable document. Let's now take out the accounts from it. Let's have a look at the profit and loss account, the balance sheet, and then the cash flow, which tells a different story, as you will see. Let's look at Trader's profit and loss account first. It's a storybook. It tells us what's been happening during the year. We can see they've earned revenue of 120. Remember, that hasn't all come in cash. We had cost of goods sold of 30 and a gross profit therefore of 90. Expenses only 15 and a net profit of 75. When we look at the balance sheet, we've got a fixed asset, that's the ship, and we have current assets, things that turn over within a year. Accounts receivable, the 60 that's still owed to us, and cash of 15. So we have 75 to add to our 80, giving us 155, which is balanced by the capital, 155. Now let's look at the cash flow. The cash flow statement is another storybook, and it tells a very different story. We saw with the profit and loss account that we had a profit of 75. But how much cash came in? Well, we started with Antonio putting 100 into Trader, which then bought an asset for 80, the ship. It had 20 left. The customers only paid 60. Food cost 5, wages 10, gold 30, 45 in total. So trading only brought in 15. Available therefore is 35, of which Antonio took out 20, leaving cash of 15. 15 compared to 75 profit. Companies can look profitable and run out of cash. Trader better be careful. Pacioli told the merchants, this is how you should do it. Keep your personal accounts separate from your business accounts. You can still use the same approach. That is to say, all your personal possessions are owed to you in a sense. Your capital is your claim on them. But this is private. Only you will see it. So let's see what that would look like on a worksheet. First we see Antonio's capital. He has a nice house and he's got 100 in the bank. So his capital's 150. He spends the 100. Then Bassanio comes along, wants to borrow some money. He hasn't got any, so he borrows it from the banker. Then he lends money to Bassanio. The banker is told, cancel your loan, and he does. And Antonio is so pleased that he cancels Bassanio's loan. The ship arrives, it's made a profit, and that increases Antonio's capital. Antonio takes out 20. Let's see what his closing figures are like. The investment in Trader is now worth 155. His house, of course, is still worth 50. Bassanio doesn't owe him anything anymore. He has 23 in cash. His capital is now 228, and he doesn't owe anything to the banker. So we've seen how to record Antonio's business, and his personal records too. And it's time to say goodbye to him. Please visit understandaccounting.com, my website. You'll find lots about Pacioli there, and me, and even recipes. I like cooking, not the books, just food. And my book, Understand Accounting, available from Amazon. Another one I'm writing called Understand Maths, for people who missed out at school and for teenagers. And I'm going to do videos on, first, how the accounting system developed over time, which is very similar to the one we've just been looking at, but shorter. Another on Pacioli's method for tackling tax, bad debts, depreciation, prepayments. Of course, they didn't exist in his time, but we have to deal with them, don't we? And another on how to prepare 5-year plans, the Pacioli way. I touched on this in my first video, but I'll develop it in more detail in another. Well, I've said enough. Bye!